MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Eric Hadik, president of InsideTrack.com, Inside spelled INSIIDE. Welcome back to the show, Eric.
Oh, thanks for having me back, Jim.
Eric, I know you like to look at natural cycles in the business world, but has Donald Trump put a wrench into those cycle works with his talk of tariffs on steel and aluminum?
Well, those type of fundamental events can often create some added volatility in the midst of cycles, and it can certainly distort some of the short-term expectations, but by and large, it's often the cycles that are anticipating those types of events. Right now it's just, an announcement and then a tweak on the announcement and then some adjusting of the tweak on the announcement. So, the markets are all over the place, and when it's all said and done, what concrete policy actually comes from that, well, then we'll see how that impacts the market. But it's even on a broader scale. It's even like we talked about in early 2016 when I was explaining how long-term dollar cycles were projecting a major dollar top in late 2016, early 2017. And then I described how the last 40 years, a very consistent correlation has been Republican administrations are weak for the dollar, Democratic administrations are strong for the dollar, and so that dollar analysis and those dollar cycles were what had me expecting a Republican administration even before Trump was the candidate. So it's often those cycles that maybe not drive, but at least anticipate fundamental events, and then when those fundamental events occur, it's just a strong validation to the rhythms that are in the markets, in nature. It's not really that mystical or esoteric of a study. It's just a very natural ebb and flow of human nature and human psychology.
Right, and I think you've also talked about war cycles and how they affect it. Where are we in the war cycle, and how does that affect markets?
Well, the biggest thing that I have looked at from a war cycle perspective is it's within the concept or context of the 40-year cycle that I've discussed so much, but a broader overarching 80-year cycle that just the last few phases, you time the culmination of the Revolutionary War in 1781, and then 80 years later, 1861, it timed the onset of the Civil War, and 80 years later, 1941, it timed the U.S. Entry into World War II, and 80 years forward from that is 2021, and it goes back much before 1781. I've documented it back into the 1200s, this 80-year cycle. More European back then, but it's a very consistent cycle, and it makes sense even from a human psychology standpoint. Again, that when you talk about those that don't learn the lessons of history are doomed to repeat them, and something like war is something that when you've lived through it, that generation is very more sensitive to trying to avoid it at all costs, but then that starts to drift back in the memory, and these cycles are just a way of measuring that type of rhythm in human psychology. And with the average age span getting up towards that into the 70s, an 80-year cycle makes a lot of sense. And history shows that it has been uncanny, especially in the last few centuries. So 2021 is what I've been looking at for a culmination of that. But there are a lot of intervening cycles that have to do with specific regions of the globe, like the Middle East, between 2018 and 2021, when I thought we'd see some turmoil, but also a move towards a bit of a unification there. And those unifications often occur during times of upheaval where one group often unites against another group. So unification in and of itself is not necessarily some great panacea or a positive event. It's just a natural reaction to a perceived threat. So all of that even leads into this 2021 time frame. So I think that the coming years are going to see some escalating tensions around the globe.
Well, when you said unification, we have North and South Korea talking again, and they haven't talked in years.
Right, and in those cases, it is a other than a positive thing, I'm not sure of another better word, but it's something that's viewed as, okay, that's a good thing. But often you look at both world wars and your allies and your Axis, and that type of unification is in the midst of some of the greatest struggles. So unification in and of itself does not, like I said, connotate anything rosy and warm and fuzzy. But it is interesting, as you point out, how things have really shifted in Korea the last month or so.
We'll have more with Eric Hadik right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Eric Hadik. Eric, where are we in the crude oil cycle?
Crude oil completed the monthly outlook that I had been talking about for, it was actually one of the few times when I saw all of the energy markets showing a cycle peak at the same time. Usually the crack spread and the different influences on things like heating oil versus unleaded gas trigger more divergence at turning points, but all of my work had been pointing to January 2018 as being a multi-month peak. So we're in what I expect to be a consolidation phase for a few months before I think that there will be the structure and the impetus for another larger move in the oil market. So I think we're in a consolidation phase right now, and there's some indicators that I use to really help me identify the magnitude of that correction or that consolidation. And right now, those indicators have really just shown that we should expect at least a couple months peak to be holding, which now it has held for over a month. But unless anything of a larger magnitude turns negative, then I would expect crude to be heading back towards its highs in the second quarter.
I was amazed that crude oil stayed strong through the winter months when traditionally it drops in December, January.
Well, I think there were different factors. You even had another downturn in the dollar at that time, and the dollar dropping to new multi-year lows early in this year. And so I think that was even one of those things that helped spur the oil markets higher, along with, we did have some more serious weather, cold issues, even, surrounding New Year's Eve, when Times Square was on track to be the I think, second coldest New Year's Eve in modern history. And so you have a couple of those Arctic plunges, and that has, whether it's an actual physical impact on crude or more of a psychological impact on, heating oil in particular, but it often carries the other oil markets up with it. So it wasn't much of a surprise to me, but like I said, it was more that going back in July and August of last year, when several of these monthly cycles, and they were very diverse cycles in each of the markets. Crude had a convergence of one set of cycles, unleaded gas another, heating oil another, natural gas another, but they were all converging in January and projecting a peak. So as we got some multi-week and then multi-month buy signals back in mid-2017 and then again in October, it just kind of validated that and told me to look for acceleration higher into January, but then a significant peak to take place at that point. So whatever the precise fundamental events that caused that, I think you can debate a few of them, but I think it was enough of a perfect storm of factors that was able to prop up all of the energy markets leading into the early part of the year.
Including some so-called perfect storms, real ones.
Exactly.
We'll have more with Eric Hadik right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Eric Hadik. Eric, the European Central Bank says it's going to continue its bond buying program at least until September. How does that affect the cycles for business there?
I watch certainly the euro as a currency, and I watch the Stoxx 50 cash index of European equity markets. And that one in particular is one that has really caught my interest and my attention over the last several months, where the Stoxx 50 cash index has had this critical swing point right around 2950 for the last 2 years. After it bottomed in early 2016, that 2950 level was initial resistance that it bumped up against a few times. Then it finally broke through that, and suddenly that 2950 became key support for the two significant bottoms of 2017. And now we rallied back up to the 1 to 2 year highs in late January, and within 2 weeks we were right back down to that 2950 level and breaking to new 1 to 2 year lows in just a matter of weeks. So at least from the European equity standpoint, I think it is at a very decisive level. It wouldn't surprise me to see the market try to rebound from here. Usually when you have a sharp drop like that right to a key support level, there will be some licking of the wounds and some consolidation before the market's able to muster up another wave of selling pressure. But I think that in the coming weeks, if and when that level is broken, particularly on a weekly close basis, I think that's going to be spelling trouble for European equities, and that would certainly go hand in hand with the reason for trying to keep stimulus, trying to keep interest rates low, because the economic outlook isn't as rosy as they'd like it to be. So I think that the bond buying program is as much a reaction as a proaction or action to what's going on there. I think it just reinforces that there's some underlying concerns, and it wouldn't surprise me to see another break in the markets create the type of flight to quality that you often see, at least on a very temporary basis, in between equity and interest rate markets.
And on a reality right now basis, you have two parties elected in Italy that are anti-immigration, anti-Europe. I mean, the European Union right now is on pretty shaky ground. That's not good for their stock market either, is it?
Exactly. And, you're still working out all the specifics surrounding Brexit, and you've got a lot of other concerns in different countries in Europe. So that certainly corroborates what the markets are showing and what some of these technicals and cycles are showing. And I just keep discussing, too, the fact, even back in 2015, 2016, it was some of the global indexes, both in Europe and China, that led the U.S. indexes down, whether you want to consider that a tail wagging the dog or just a new reality. But with what I'm expecting in U.S. indices, this kind of lead negative action in the European and also in China's Shanghai Composite Index. It took 2 years to mount a very moderate rally, about a third of what was lost in 2015, 2016. And then in a matter of 2 weeks, it gave back an entire year's gains, basically from January 2017 to January 2018, was the second phase of that rally, and within 2 weeks it had erased an entire year's worth of gains and has lost about 60-70% of the gains since the early 2016 bottom. So these international indices are, I think, creating the yellow or red flags, the canary in the coal mine, and it fits with some intriguing cycles in the U.S. stock markets. One of the ones I've been talking about recently is a bit broader one, a very intriguing 9-year cycle that right now, this week, is exactly 9 years from the March 2009 bottom. And that bottom was exactly 9 years from the March 2000 peak in the S&P 500 and the NASDAQ 100. And that whole 18-year cycle since then kind of mimicked the 18-year move from 1982 up into 2000. And 1982 was a major bottom, and that had come 9 years after the 1973 peak. So you have this rhythm in our market that is certainly approaching an inflection point here. And at the same time, there are a lot of weekly and monthly cycles that said late January to early February should be a multi-month peak in at least some of the domestic indexes, and weekly cycles that are looking for an overall drop, one phase of it in March, but then extending into May or June of this year. So you have this convergence of a lot of different factors, and it's not just, I discussed the cycles, but there are a lot of price indicators, technical indicators I use to filter those cycles. They just don't lend themselves to a vocal discussion very well without plenty of visual aid. So it's the combination of all of that that's telling me we're entering a vulnerable period here.
Eric, thank you so much for chatting with us.
Thanks for having me back, Jim. It was my pleasure.
My guest has been Eric Hadik, president of InsideTrack.com. Some of his websites, 17yearcycle.com and 40yearcycle.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or for our guests like Eric can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.